Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend. Ira Epstein of Lynn & Associates with your agriculture update for this weekend of Friday, the 9th of June, 2017. It's about 2:30 in the afternoon. Now remember, what we do different in this particular video is we look at weekly charts rather than the daily charts that we cover Monday through Thursday. So that's pretty important. The interesting part was you had another rally day today in the soybeans, not in the meal. It failed at the 309 area. That was the rally high, highest high it's had. The corn market, it gave up some ground, but not a lot. It's had gains all the way through. And the wheat market down a little bit, and the wheat has been the leader for most of the week as quality concerns are there about the crop that we're getting in. Cotton market, another down. This market hasn't really had much in the way of any up at all since it peaked out near 87 cents a pound, and it has come down to 75.69. Sugar market not going anywhere, and it's probably time in the next week or so to start getting ready to move away from the Julys into the next months. It'll probably be the D's that you want to go to in the cotton and the October sugar that I'd be looking at. Also keep in the back of your mind this coming week we have the FOMC meeting, although the prices of currencies haven't really impacted American grain at this part of the year. It's very typical it doesn't. It's June. We've got a new crop in the ground, and the question is, how does the crop grow? So as I look at the soybean market on a monthly basis first, this downtrend line is still holding. Now there's two lines you could be looking at for support. One is this light line right here that I'm pointing to. The other is the red line right under it. That's, to me, the bottom of the chart, obviously, the most recent lows, and the other one has been acting as the top of a trading range and the bottom of this pullback. But the market is still in an overall downtrend. When you go to an area chart of weekly closes, that's all that it is. You've gone from 963 to that break low, and now you're back up to 941.5. If you want to know what that low was, it was also 909.5. So you've come from 909.5 back up nicely, don't get me wrong. That's a big rally that you've had at 22 cents. So nice little rally underway. When you go to the weekly chart, you get to see this as well as to how the bounce is occurring. But I don't think the bears are going to get nervous unless they get over that 980.5. That's my own thinking on the chart action. I'm looking at the swing line, and you don't have a trend yet. Now, you can establish one if this week's low is taken out. Barring that, you'd have to still have that 980.5 as a potential move that you'd have to get over, and that would not set up an uptrend. Why? Because you'd still have a lower low and then a higher high. Take out this week's low, and you end up with lower highs and a lower. And in fact, that would set it up. Take out 909.5, you even have lower and low. So there's the setup that can come about. What about resistance on the chart? Well, if you do rally, I'm looking for 66.75 to 72.5 is to be a big brick wall right there. Barring some event in the market happening, I think that'll be hard to get through. Obviously, if you get over 80.5, my thinking isn't right, but we'll see what happens on the longer term charts. In Bollinger Bands, you haven't gotten to a lower Bollinger Band since the month of April, and since then, the market has drifted to the downside, getting a little bounce at this point. In momentum, you're still basically hanging right here with downside momentum. Yes, the red line's turning up a fraction, and that could give the market an even further kick. You know, we have warm weather coming this week. Maybe traders will talk about that. I don't know. I just know that that's the resistance zone, and if you take out this week's lows, it's going to look bearish on the chart. Meal market is very similar to soybeans. Momentum trying to turn up here. The market's trying to get a bounce in it, and there's solid resistance, 317, the 18-week average, and 316.30, the 100-week, and you could get a bearish crossover here, where the 18 gets under the 100 when we reopen next week. So I'll be looking at that in a big way as well. In the soybean oil, the market finally rallied back up through this week, the 100-week average right up to the 18-week. You're not trending in the market because you have a lower low and a higher high. Momentum's trying to come up, and it appears that once again they have flip-flopped on the bean spreads, or the crush is the right way to say it, and now the oil seed's getting more of a bid than the meal. You saw that in the daily charts today as meal came up and gave up all its gains, and oil held on to get gains. In the corn market, is this a breakout to the upside? I think a lot of traders are going to say it is. And until the market gets back under these lows, corn looks like it's trying to do more to the upside than anything. It is got upside momentum. Remember, I don't count on weekly charts overbought or oversold. I just look at the general momentum. I use the slow stochastic in a different way on the daily charts, and I teach that in my charting course, by the way. And on the wheat, I'm not surprised you're having a problem. You're up to the 100-week average. You failed here. You failed again just this week in the market. And if you go back to this number, you failed. This is a big number. Now, our firm, who we are really a good grain firm in my opinion, a lot of research, they are of the opinion you're making a major bottom in the wheat market. And that this low, this one back here, is not going to be violated again, that this market's might have done its damage already, and it's ready to break out. That could carry the wheat with the corn. It should not impact the soybean, though. In the cocoa market, I can see now an argument here that if cocoa clears last week's high, why not make a run for the upper Bollinger Band? You already have a market with higher lows. You have lower highs. You do see that, right? But because the pattern sets up, and let me show you this, with the high here taking out that one, the history of it then is higher lows, higher highs. Admittedly, you've slipped back here, and that was that momentum loss that you had, but you're still pointing up and trying to get things going. And I think if you took out the 2060 level, the market comes alive one more time. So we'll see if that is in fact the case. In the sugar market, momentum is still locked in bearish. The market has got a pattern of a higher high, a lower low. I don't see a trend. If you had a good rally, I would think there's big time resistance back up at the combination of the 100-week and the 18-week moving average of closes. The coffee remains very much in a bear pattern, fighting its battle against the 100-week average in green. It's well under the 18-week. The swing line has got a pattern of lower highs, lower lows, so the rallies continue to be sold, and this market's still looking very, very weak as you take a look at what it's doing there. In the cotton, you finally took out this week that break low of 76.17. Now, you're only down 60 points from there, but momentum is still pointing lower. You've killed the bull market. You got over one time the upper Bollinger Band and went right back, and look at, for 3 weeks now, you have been hitting that 18-week moving average of closes. So a market that wouldn't surprise me to get a bounce here back to that number, but is it suddenly going to get bullish? Not on that chart at this point in time. In the cattle market, the bull market remains alive. You do have a pattern of higher lows, higher highs. Notice how the 100-week average in green is skidding right into the 18-week, and when the market reopens, the math should get that 18-week over that 100 for what's called a bullish crossover, and then we have to wait and see how the market respects all that. But if that occurs, it wouldn't surprise me if the market eventually tries another move to the upside. In the hog market, you have no chart pattern to work from. You've got a lower low and a higher high. You certainly have upside momentum. You've had it. You're riding the upper Bollinger Band. In fact, if anything, you move to the right-hand side of it. So I don't see anything weak there. And don't lose sight of why these markets are coming alive to a degree. You still have very strong Chinese demand for American pork, and now beef is going to be sent to China. That starts in July with the licenses once they're all given out and all. But interesting how the events will happen. Now, if you like what I do here, you've got to like the charting course that I created. And this is a pretty new course. I just did it in the past 6 months. And what the course is 54 videos, over 4 hours of video time, where I walk you through how to build each of these indicators, the swing line, the moving averages, which ones I recommend you use. I don't show you everything here. Believe me, I use more moving averages than you're seeing as to what we're doing right now. You're going to learn window envelopes, another profit-taking tool that I never show in these videos. You're going to learn how to work with, obviously, the slow stochastics as I use them, and of course, other parts of this course that you haven't seen in ways that I like to teach it. So Bollinger Bands, everything I'm talking about here, how you work with the slow stochastics. I walk you through first, and let me show you this. I walk you through a PowerPoint. Then I open up charts, and I intentionally cover the name of the charts. I don't want you to know what it is, because my concept, as I see it, works in stocks, ETFs, futures. Doesn't matter. If you can chart it, you should be able to use these indicators on it. And the idea here is checks and balances. Does it mean you're not going to have losers? There's a guarantee. Paper trade it, you're going to have losers. There's another guarantee. Paper trade it, you're going to have winners. The key is money management. You're going to be wrong. Nobody can be right all the time. I imagine there's somebody out there that is, but if he is, he'd never tell you about his system anyways. So you can call us. It's the best way to get the course. You can go to our website. But either way you go, if you type in Ira 20 or talk to my staff, they're going to use the word Ira 20 and the normal course, including the charting software, which is $99 a month, my research, which gives you a video in the mornings that reinforces everything you're learning with current chart data, not the chart data you're learning from. That's $60. The whole course is $99.95, but with the Ira 20, it drops to $79.95. Remember, there's no shipping, no handling. This is an online course. It's really simple to work with. How do you get it? Again, call us, 866-973-2077. Visit our website. You can even click up here, and you will see an icon from what? That'll be the YouTube icon. It'll take you right to the forums that we have. I'm Ira. You have a great weekend, and I'll see you all come Monday.